it's a really interesting company. And as you pointed out to me yesterday when we were stacking each other, we have spoken about the business in the past. It's a multifarious business, got so many wings to not only its business and its story. It's truly fascinating, but it's also one that I believe looks like value at the moment.
Emmet, how are we getting on?
Good morning, Mike. Beautiful day in Dublin. How is it in the south of France?
It's grayer than it usually is, but I'm not complaining too bad. I think we have a big storm coming in tomorrow, so batten down the hatches for that.
Yeah. Oh, interesting. So I hope it's not coming up here. I've done picking leaves up off. I'm finished picking leaves out of my garden. It's just one of those perpetual things when you have a bunch of high trees around you. Storms equals work.
Yeah. The storms here are fairly intense now. I think picking leaves out of the garden would be
Yeah,
the
it's
least of
such a
your
privileged
problems.
thing. If we lived in, I suppose, Central Europe or in the US, a storm equals something far more violent than picking leaves up off the ground.
100%. Yeah. No, actually, it's funny you mentioned, especially in the US. Kind of that kind of comes into my investment thesis for later in the episode when I have following profit. So that's a
Oh,
little
good.
Easter
Look
egg
forward to that. Yeah.
for later in the show.
What's actually, I think, interesting for our listeners is it's remarkable how little prep we do on this show. And what I mean by that is you and I, of course, prepare, but I don't know what you're going to say and vice versa, which I suppose lends an organic quality to it. So I have no idea what you're going to pitch to me. So I'm looking forward to hearing that.
Okay. Well, where are we going first? Do you want to talk about
Well,
Horizon?
yeah, and actually, as I mentioned last week, Horizon is our flagship product here at My Wall Street. It's how the business keeps going. It's where the lion's share of our research and energy goes, and it is a minnow as a service. It's coming up to 6 years old, and I think I said that last week. And it is built to find the next mega winner. It is my life's pursuit, and as we record just this moment, Wednesday, 22nd October, 10 in the morning, there are 24 positions in the folio or stocks. It's just a way of saying stock. So, like, I might have bought one stock 6 times, but that's just one position. And of those 24 positions, six of those 24 are up more than 100%, and one of the 24 is down more than 50%. And I suppose a listener would go, so what? Good for you. I lost my shirt on Metro Mile, you bollocks. Well, hold on a minute. Did you? Did you keep the shares you were given for your Metro Mile shares and commit to keeping them for 16 years? But anyway, I am out to find and buy more stocks that grow 100-fold from now, from today. And only a subset of subscribers will actually have the temperament to hang around for the 16 to 25 years on average that it takes for a 100 bagger to materialize. So when I tweet about my 100 baggers and I get my ego fed and fluffed by being interviewed on TV in America or articles here and there about this investing success, really the only thing I should say when that happens is I nearly sold that stock about 500 different times when I needed cash. And the hardest thing to do is to not panic. Well, what I'd say, Mike, is I've learned a lot of things the hard way, which is a pity. And in stock investing and running a business like MyWallSt, it's also a slow way to learn lessons. But I can say that I reckon the 5 stocks that I'm going to identify in next month's buy alert will all grow tenfold in the fullness of time. And I'm going to invest in several of them. I'm toying with actually buying all 5. I haven't made the decision yet. And I certainly believe that one of them will grow 100-fold in my life. And that's Horizon. It's a service for people whose trust I've earned and who basically in return get my best effort at this game. So for a short time, as regular listeners know, we're offering it at half price off. That's $500 off $999. You only pay $499. There's only a limited number of spots. And as I mentioned, we are repricing it to $2,000 in 2026. So lock in 499 now. And if MyWallSt goes all in on profit, which is moving closer as a probability, we will just consider running Horizon on a if you're in basis. Emmet's over there in the corner doing his thing with an audience, and there will be no more members. That decision hasn't been made, but I'm simply saying that today you can buy for $499 instead of 2K in the new year, or worse, shutting the door fully. So email pod at mywallstreet.com today, and Frank or someone on his team will look after you.
Perfect. Okay, that's Horizon done. Now we're moving to my neck of the woods. We're in France for the
Oh
next
yeah.
section. You wanted to do a full hour and a half on the Louvre robbery, but
Well, I love
I've
those kind of
limited you.
things. I love those kind of things. A diamond heist. It's just so intriguing. Not that you wish for the bad guys to win, but there is something conditioned in us when we watch heist movies or read
One million
books.
percent, and the fact that it
Yeah,
was done in such a way. Sorry, if people are listening, and they don't know what we're talking about.
yeah.
Basically, the Louvre was
Le Louvre.
robbed.
You're the one who's fluent.
The Louvre was robbed of like a bunch of French historical crown jewels and from the Napoleonic Empire and stuff like that, and all in
Yeah,
about 7 minutes. It was like a really professional heist, and no one was hurt. Like that was one of the big things. Do you know what I mean? It was a very professional job. You kind of imagining George Clooney and Brad Pitt in Ocean's
yeah.
11 organizing it. Like,
If you don't count emotions, I'm sure the security guy sitting outside the door, his feelings were hurt when he looked in and saw the
yeah,
jewels were gone. He's like, "Oh no, this isn't good. Did somebody
yeah.
move the jewels?"
But apparently there was a security guard in the room, but their
Oh,
initiative is to protect the visitors of the museum, not so much to protect the jewels.
so what did he do? Just stand there and go, "How are
I
you,
think I
lad?"
think he got everyone away from the dangerous criminals. Like,
Right. Yeah, when you
mm,
look at how it was pulled off, it's quite interesting. They had a cherry picker, which kind of lifted. It's always very simple. The
yes,
kind of security loopholes are there to be seen whenever you walk around a place. If you're a jewelry heist kind of person, you can kind of say that's not very secure. And clearly, they had done a lot of tours of the Louvre. You got to imagine as well that footage. There's a lot of footage being reviewed at the moment of the millions of people who walk in and out of the door every week.
yeah, yeah. No, it gives a lot of credence to the effect of just dressed like you know what you're doing. So apparently they're all just wearing work vests and no one
Really,
questioned anything.
that's so
Yeah,
funny.
it's
Yeah, I'm
funny
going
now.
to
I'm
try and get
looking.
into a gig sometime by just wearing,
Yeah.
a corporate pass around my neck, and
Apparently,
yeah.
two lads got into, I think it was Glastonbury electric picking or something. They were just carrying a keg. they walked they walked past every single checkpoint, security, ticket, whatever. Just the two of them had a keg. They're
And
like,
they had
oh,
a cake. I mean, that sounds
and then
like a
they got
great
in with a
day out.
keg. Yeah, yeah.
That's
It's
just a
funny.
brilliant day out. Well,
I'm
I
going to
thought we
stop you
might,
now, Emmett.
yeah,
So we are talking about the Louvre heist. From the start of this recording is about how long it took in and out.
amazing. Well, I
Yeah.
thought we might assess one of the most successful companies in France's history to see if we can pull off an investment heist of our own here on Stock Club, and specifically the company that the week's news brought my attention to, or kind of I felt there was a parallel, was LVMH, better known as Louis Vuitton Moet Hennessy.
Yeah.
And it's a really interesting company. And as you pointed out to me yesterday when we were slacking each other, we have spoken about the business in the past. It's a multifarious business, got so many wings to not only its business and its story. It's truly fascinating, but it's also one that I believe looks like value at the moment. So I thought I'd go off on one and kind of explain the history of this business, because there are very, very few businesses with a backstory like LVMH.
I was about to
So
say you're going to be
yeah,
here for a while, but I am glad you're talking about this because luxury stocks have having a bit of a resurgence after a bit of a come down. So
yeah.
it's good timing for this.
Well, it is. Its story stretches all the way back to its foundation, which was a Parisian trunk maker in the 1850s. And as most people know today, LVMH is the world's largest and most influential luxury group. It's worth about 300 billion euros or 350 billion US dollars. It employs 200,000 people. And apart from all of that, it's absolutely fascinating story. And it owns so many of the world's leading luxury brands, including Louis Vuitton, of course, and Dior, Givenchy, Fendi, Tiger, Bulgari, Sephora, Dom Perignon. I mean, its list is certainly, I don't think your average person in an average week goes off to buy an LVMH product, but most people in their life will at least interact with one. And I hope most people who listen to this podcast get to enjoy the products from LVMH, you name it. I mean, it's a luxury monopoly of sorts. And as investors, we do like luxury products because they have pricing power that's far less susceptible to downturns
Yeah.
and the overall economy. They appeal to people who just don't care. They have so much cash, it doesn't matter.
Well, that's worth expanding on for a second as well. Is that
Mm,
it seems a bit counterintuitive, but like
yeah,
luxury brands have always been in some way defensive stocks because their end customer base isn't really affected by what the kind of average consumer would be in terms of macro factors and like a depressed economy or whatever. They're in a different kind of class completely, and so
totally.
that's why luxury companies have always been seen as beyond kind of the macroeconomic cycle in a sense.
This time a year ago, I was in Vienna, in Austria, and I was talking to Anne Marie, and I was looking in the window of Brunello Cucinelli, which is, I think, a wonderful business, and it's an apparel company. It's nothing to do with LVMH, but Anne Marie told me, as we both know, Anne Marie is a walking Wikipedia. She's an encyclopedia. She's everythingpedia. She's so smart and so well read. And she said, "Oh yeah, they strategically target people who have an annual clothing budget of $100,000 a year." And I was like, what? There's actually enough people to actually
Yeah,
target that. So if your annual clothing budget, although I'm sure if you have that level of wealth, you aren't too familiar with what a household budget is. But if you can drop 100 grand a year on your clothes, then you're a Brunello Cucinelli potential customer. Likewise with Ferrari, another independent luxury brand. If you can afford a Ferrari, you don't think about its price.
yeah,
They delivered the best of everything, right down to the stitching on the leather,
yeah,
every small moving part in the pit, and you just buy it. So that's LVMH's customers. And I thought I'd start with a little game, Mike, because I'm going to, I mean, the amount of companies it owns is unbelievable, 70 something companies. So I'm going to name an LVMH company, and you have to tell me what you think it does, what they sell. So, for example, if I say Belvedere, you say
Belvedere's vodka.
correct. Okay, now that doesn't count. I have seven
Uh,
for you, so you're not
well,
getting a
I'm going to
point for
start
that.
out. It's eight now, so I'm one for one.
No, no, I'm okay. If I say Marc Jacobs, there you go. There's another one for you.
Marc
What?
Jacobs. I think
No,
they're
that's not. This is
handbags.
this is a warm up round. This
Well, you
warm up.
can't keep giving me these questions, and I'm
No,
getting
I'm
it.
trying to illustrate. Trying to illustrate the competition with example, but you've twigged it. Okay, we're going to jump in. Your first of seven. This is
my
not your
my
third.
third of nine.
No. Uh, right. Okay. The first one is super simple, Mike. I've handed you this one. Tiffany.
Tiffany is jewelry.
Correct. 1 out of 7. So
I
see,
didn't
it's a
know
super.
LVMH owned Tiffany. Wow.
Oh yeah. Oh yeah. Tiffany, yeah, they're required. That was one of the stocks that we originally put in our. Anyway, I won't go off when you. Tiffany is owned by LVMH. Givenchy, what do they do?
That's like just fashion, isn't it?
Yeah, I'll give you that. It's a French couture house. God, you
In
uncivilized swine. But yes, it is. It's fashion. 2 out of 7. Krug.
Krug.
Mm.
How do you spell it?
Krug.
Oh, I don't know. Watches, maybe.
No, it's a high-end champagne house, fully owned by
Uh,
LVMH. So you're 2 out of 3 so far. Ardbeg.
Ardbeg is
Mm-hmm.
whiskey, Scottish whiskey.
Correct. Well done. That's very impressive. 3 out of 4. Kenzo.
Kenzo.
Mm-hmm.
Oh, I don't know. Japanese whiskey.
No. Mm-mm. It's Japanese Paris fashion. When I read the description, I never heard of Kenzo, by the way. I was like, Japanese Parisian fashion. That's quite the blend, but that's how they describe themselves. Okay, so you're on 3 out of 5. Number 6 is Fenty Beauty. What does Fenty Beauty?
Uh, Fenty. I think is that the one Rihanna's involved in. I
I'm
think
giving you
that's
that one,
like
Mike. I
yeah.
didn't even know. I was like, Rihanna makeup? What is Rihanna makeup? I had to look up what Rihanna makeup was to realize it was Rihanna's makeup.
There you
There you go. Well done. What are you on? 4 out of 6?
go. I think my count was 6 out of 8. But go on.
Go on. And the final one I'm going to hit you with is Daniel Roth. Do you know
Daniel
Daniel Roth?
Roth. Jesus. No, he sounds like a director.
Or
Daniel
like what's
Roth.
Hyman Roth? Is that A Few Good Men, or no? What's that other movie? Kaiser Sose. Anyway, yeah, Daniel Roth. What does Daniel Roth do?
Oh, I don't know. Men's Fashion House.
No, I'm not giving you that. Daniel Roth does watches. Like if you were saying,
Watches.
"Oh, that watch looks like mine," and then a Daniel Roth wearer looks at your watch and you're wearing a Swatch, they're highly offended. It's like, excuse me,
Okay.
this is a Daniel Roth. So you scored 4 out of 7. That's good.
That's
That's
okay.
respectable. Like, I mean, honestly, you and I are not typical LVMH every day of the week type guys, but good. Okay, let's kick on. So LVMH is primarily listed on the Euronext Paris Stock Exchange. And the Euronext Group, as our listeners probably know, is the third, I think it's the third biggest stock exchange group in the world. ICE, Intercontinental Exchange Group, they own the New York Stock Exchange and a whole bunch of exchanges. NASDAQ owns a whole bunch of exchanges. And then third on the league table, to the best of my knowledge, is Euronext. And they, as their name suggests, have a whole pile of stock exchanges around Europe. Its ticker LVMH's ticker is strangely MC. Um, Maybe it's Moe. I don't know where they got the MC.
Moet and Chandon,
Oh,
maybe.
of course, Moe and Shanda. That's exactly what it is. With listings in exchanges all over Europe. So they're on the Dusseldorf Exchange, Frankfurt, Berlin, Vienna, Stuttgart, Hanover, and so on. Like it speaks of a company that's been around a long time that it listed on so many European exchanges. And of course, it's also available in the US on the OTC over the counter market under the symbol LVMUY. So no matter where you are, you can buy it. So let me start by describing the chart, because people, that's what they tune in for. They love Stock Club because they're going to hear the description of a chart. Who doesn't want that? So the story of the chart is one that just goes up and up and up and up and up until the 10th of July 2023, so just 2 and a bit years ago, where the price of an LVMUY, and so we're talking about US dollars here, the price of a LVMH share in America on the 10th of July 2023 was just a couple of cents short of $200. So it went up, 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 hit $200, and since then it's gone down, 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 and it's about $142 at the moment. It's 2 and a bit years later. It's had a bit of a trough. It was down around $120 a couple of months ago, and it's now $140. And that's just so people understand the shape of the graph. And its market cap, as I said at the top of the show, is about 350 billion US dollars. So let me hop in the time machine for a moment and tell the story. The year is 1854, and a 33-year-old craftsman named Louis Vuitton opens a small workshop on Rue Neuve de Capcien, is it Capcien, in Paris? And this young fella, young Vuitton, was clearly handy because from that first shop, he more or less revolutionized luggage making by replacing big, heavy, roundy trunks with these light rectangular ones that could be stacked for travel in trains and steamships at the time, because clearly commercial aviation was a couple of hundred years away. So he built luggage that was easy to stack. And his designs became really well known, synonymous with quality. I don't know if much luxury. They were not inexpensive, but it was a quality case, and evidently they were very
I
well.
imagine people who could afford suitcases back in the 1800s,
That's a very
it
good
was
point.
all luxury, you know.
Well, this is true. If you're going anywhere, you were well got. Uh,
Traveling was a luxury in itself.
Oh, that is absolutely true. It's a good point. So, after Louis Vuitton's death in 1892, which is 38 years after he opened that first workshop, his son Georges Vuitton expanded the business internationally and introduced the famous monogram canvas in 1896. It's amazing that that kind of logo is so old, and that was introduced to combat counterfeiting, because people could see these kind of well-built cases were moving, so they started get cheap knockoffs. Mike, I mean, this isn't a quiz question. You've won that quiz. Can you picture the Louis Vuitton branding, like in a standalone situation? Do you have a picture of it in your mind?
Yeah, it's just an LV, isn't it?
I see gold lettering on a brown background.
Yeah,
That's
yeah,
kind of,
yeah.
yeah, that's what I think it is. Anyway, while Louis Vuitton was pioneering, so while dad was pioneering the leather goods, another family enterprise was flourishing in France's Champagne region. And as you said, rightfully, with MC, Moet Chandon was founded 111 years before Louis Vuitton was fiddling with keys to try and open his workshop, going, I can't find the right key. And it was founded in 1743. We're talking ancient businesses here. And it was already the most prestigious name in Champagne by the time Louis Vuitton kind of was building his cases. And conveniently for me and for our listeners, I'm going to fast forward through 228 years as if nothing happened at all. I mean, I presume something happened, but I don't know what happened. And in 1971, it merged with cognac maker Hennessy, which, by the way, if you can follow this, was established in 1765 by an Irishman.
There
Thank
you
you.
go. I didn't know
That
that.
I did not know. His name is Richard Hennessy. Thank you very much. And so while all the other Irishmen were fiddling with whiskey and Guinness, this fella go, I'm way more upper brow than that. I'm going to invent a drink called Hennessy after me. So anyway, so they merged in 1971 with Moet Chandon to form a business called Moet Hennessy, and this kind of boozy union created a powerhouse in luxury beverages in the early 70s. So fast forward a bit, and in the 1980s, Moet Hennessy and Louis Vuitton were both leaders in their respective fields. But the whole luxury industry was starting to change because more people were moving into that have more than I need category. Globalization, rising wealth in the United States and in Asia specifically were really transforming the whole operations of luxury businesses, and old family firms were really facing a challenge of scaling and remaining exclusive. And over the years, you and I have looked at businesses that were once regarded as exclusive, and through overexpansion and accessibility and discounting their goods, lost their strategic position. Like the one that springs to mind is Michael Kors. Like Michael Kors was once a very exclusive brand, and then, as far as I know, you could buy it in more everyday stores, and that kind of lost their strategic positioning. But the other ones, who said, no, we are always priced. You want to scale without losing that prestige. You
Yeah,
know what I mean?
yeah. That's the trick, really. That's
Yeah.
that's that's what underpins the entire luxury industry. Really, is being able to
It is.
maintain
That's
that
it. Yeah.
exclusivity while still being able to grow sales every year.
So enter Mr. Bernard Arnault, a French industrialist who is actually an engineer. And Arnault took over his family's construction business in the 1970s, and for whatever reason decided to set his sights on luxury stuff. I mean, his dad was like, and his mom were like, okay, we lay bricks and we melt, we smell metal and we build steel stuff. And he was like, I'm thinking handbags. And they're like, who are
Yeah,
you? But anyway, he listen to this for a Berkshire Hathaway like story. I think anyone who knows the backstory of Berkshire Hathaway in 1956, Warren Buffett acquired a textile mill called Berkshire Hathaway and used it as his vehicle for acquisition and growth. Well, this is very, very similar. So in 1984, Bernard Arnault acquired a struggling textile group called Boussac, which happened to own Christian Dior. And he recognized that Dior had this unmatched brand equity, and he decided to reconstruct the company. Very Berkshire Hathaway. Warren Buffett moved into that textile company and said, goodbye, you lot. We're going to do this right. And that's what Bernard Arnault did. He reconstructed the company and revived its fashion house, and he used it as a base for further expansion. And he saw the future. He saw that the future of luxury would be built on not a single business, but a portfolio of really diverse brands sharing the efficiencies back office, while retaining all this kind of creativity, branding, luxury out front of stage, as it were. So in 1987, the merger of Moet Hennessy and Louis Vuitton happened, and it created LVMH, and Arnault quickly maneuvered to become its largest shareholder and the controlling voice of the business. Do I know how he did that? No. Just the way I don't know that what happened in those hundreds of years that I did a fast forward on. Not really, but it's a thing. Maneuvering to become a large shareholder is a thing. You can do it. He did it, and he became a large shareholder. So by 1989, he had consolidated power as the chairman and the chief executive, and got going on what really has to be said is one of the most remarkable and successful acquisition sprees in corporate history. I remember years ago, Mike, when my Wall Street was only a baby, um, we were shortlisting the best companies that we could see for inclusion in our My Wall Street app. And one was called Hain Celestial, which is probably worth a conversation on another podcast, but it is a family of organic and uh, green brands for personal healthcare and food. So they have a whole pile of brands from in Ireland. People would recognize Cully and Scully soup maker that's owned by Hain Celestial, right through to all types of organic deodorants. But at the time, Hain Celestial had acquired, if I'm not mistaken, and I'm riffing here, 6,000 companies. It was the greatest at that time example of an acquired that I'd ever seen. The story changes tack, but it's only said to say that acquisition is very difficult, but when you figure out the algorithm and you figure out the machine, it can do something great. So over the next 3 decades, from Bernard Arnault basically was in the driving seat from the late 80s, he built a portfolio of more than 70 prestigious brands, as I already said. And as our little quiz at the top of the show demonstrated, it's across fashion, leather goods, perfumes, cosmetics, watches, jewelry, wines, spirits, and so on. Actually, when I was looking through the list of 7 companies, I actually had to I had to exclude a load that I couldn't pronounce. I was like, no, I'm not
Yeah.
asking that one. Anyway, so as I said, the list includes all the big names, well, more or less all the big names, and each label has retained its own personality. So when you go into a Tiffany shop, it is so distinctly Tiffany. Nothing has changed, I presume, in dozens of years. That color, whatever it's called, the tealy color. Like, so each of these 70 companies stays true to what they originally were. And then they get LVMH's financial strength and its marketing expertise and a global retail network. You can imagine the logistics of being owned by LVMH become a whole lot easier. If you want to open a Tiffany store in Shannon Airport, the delivery logistics get a whole lot easier if you're owned by LVMH. So Arnault believed that luxury brands should operate like a family run business on the surface, but managed with the precision of a multinational corporation backstage. And his philosophy was, and still is, LVMH is a group of small businesses. And that's exactly what it is. And this approach turned out to be extraordinarily resilient. So you can imagine that if there's one pocket of the business suffering, leather goods, for example, maybe another is flourishing, like whiskies. So during the 1990s and early 2000s, this globalization and travel boom just went over the top, and LVMH expanded aggressively into America, Japan, and then later on China. And the rise of the emerging middle class happened, coupled with global fascination with European heritage brands, because Europe was always seen as the home of pure ancient luxury. And it was a revenue growth rocket ship year after year after year, as I said when I was describing the graph with beautiful accuracy. And by the mid 2000s, Louis Vuitton had become the most profitable luxury brand in the world. It had margins comparable with the best tech firms, and Arnault invested really heavily in flagship stores on the world's most prestigious shopping streets like Champs-Élysées and Fifth Avenue and so on. And LVMH also became a patron of architecture. So it was creeping, and they commissioned Frank Gehry to design the Foundation Louis Vuitton Museum in Paris. And on a slightly related matter, as people who have watched the news in recent years will recall, Bernard Arnault also gave a massive donation. I think it was $200 million towards the reconstruction of the Notre Dame Cathedral after it burned
Yeah.
down, and he gave the group's expertise and brought in the experts. So I digress. So in 2010 was an unusual. It forced the entire luxury industry to reconsider its approach to e-commerce. It was clear that the internet had happened and that the internet was where people were going to shop more and more, which is kind of hard. It's hard to even remember that there was a time when going to the internet to buy something was unusual, where now it's custom and practice. And the internet at that time was seen as completely incompatible with exclusivity. If you're going in to buy a Hermes scarf, even by the way I expressed it, you're going to a place to buy a Hermes scarf. There is more ceremony and pomp because it's a luxury good. So that was kind of the thing that Louis Vuitton, the company, needed to work through and succeed at. And it did it very carefully. It invested in digital platforms and preserved the in store experience online, which was a massive mountain to climb. And in the meantime, acquisitions were really continuing at pace, with one of the most significant being in 2011, where they purchased the Italian jeweler Bulgari for 4.3 billion euro. And it really kind of sent out a signal to the world that LVMH is intent on being utterly dominant in the high end jewelry area alongside watches. And in 2017, it completed the full buyout of Christian Dior Couture, bringing the brand that effectively launched Bernard Arnault's career fully under the LVMH umbrella. And I'm sure that was one he specifically wanted to achieve. 2021, after a whole load of lengthy negotiations and pandemic delays and subjects, a very subject we debated here on Stock Club intently at the time, they closed their 15.8 billion acquisition of Tiffany and Co. And that jeweler was founded in 1837. It is synonymous with American luxury. What's that movie? Breakfast at Tiffany's. It is part of the American zeitgeist. It has such, I think, beautiful branding. It's an amazing business. And the deal was, if not the largest, certainly one of the largest deals in luxury's history. And it gave LVMH this really good foothold into the US luxury jewelry market. And as you guessed it, financially, the company's growth has been staggering. Revenue has gone from about 4 billion in 1989, Bernard Arnault's early days, to over 93 billion in 2024. And its operating profit now exceeds 22 billion euro. And its brands, I think, are 75 to 75 of them at the moment. And the market cap frequently surpasses 500 billion euro, making it Europe's most valuable company. And Arnault himself is usually neck and neck, or has frequently been neck and neck on the wealth stakes with Elon Musk and Jeff Bezos in the title for the world's richest person. And 2025 has brought a slower pace of growth mid
Yeah,
the
I
usual.
imagine the alcohol factor has to come into play
Mm,
here.
yeah, yes. You mean the decline in alcohol?
Yeah, like as in you're looking at similar stocks like Pernod and
Yeah,
Diageo are falling off a cliff. And I know LVMH's brands are much more luxury than that, but it still has to
yes.
be a big effect because the stock
Yeah,
was down. Stock fell more than 45%, I think, from all time highs in 2023 to maybe the start of this year.
yeah, that's a fact. So I am sure what revenue contribution comes from the family of alcoholic brands, but certainly when you look through the family of brands, I think roughly one quarter of them are luxury booze.
Yeah.
Um, I don't know, is luxury alcohol more resilient than everyday alcohol? So like it's funny, even the brand Hennessy to me doesn't scream absolute luxury. It seems like I don't know anyone who drinks brandy every day, but maybe I'm just hanging out with the wrong people. But I don't know. I really don't know the answer to that question. But I suspect, I remember years ago reading that Diageo were investing heavily in non-alcoholic drinks because they could see the trend on the horizon. At the time, I thought that's crackers. Even though I personally had stopped drinking, I don't drink anymore. I thought, nah, I think the world is always going to drink. And sure enough, there is a steady decline. Young people are not drinking the way they used to. You got to imagine that that longer tail will become an early majority and a majority of people, and will affect those luxury alcoholic brands. Plus, you don't buy them often. You don't, I presume someone doesn't buy a high end bottle and just down it. It sits in the booze cabinet, you know.
Well, yes and no, though. Like, as in you're looking at club culture and stuff, and say bottles of Belvedere sent to
Mm.
tables in nightclubs, 4 or 5 at a time, like that happens as well. And
Does it?
that could
Interesting.
be some of the industry that's affected
I love the
in
way you
terms
knew
of
that,
like,
Mike. That's very interesting now.
but in
My
terms of
exposure
like,
to that is like watching the movie Carlito's Way. It was like you send booze over. I'm like, oh, they bought, wow, a whole table full of booze for them. I never heard
uh,
of that.
but like just in the trends of Gen Z drinking less and less, and that
Yeah.
becoming pervasive trend in the world of alcohol.
Mm.
and I'm more focused on kind of well being and health, and basically turning their backs on alcohol in a way that the generations before them did not. Um,
I think
that's a real
it's a
factor.
very good point that didn't occur to me, the decline in alcohol. So if you're to just spin over for 1 second, would you be a bear on Diageo, a pure play in alcohol?
I don't know. It's tough. It's
It is
tough to
tough, isn't
see
it?
if that
Yeah.
if that's a real like if it's there to stay. Do you know what
Mm,
I mean?
It is. It is actually a very interesting one, and you're right. And if some people would not wish to invest in a business that sells alcohol, like it is you could say by association, it's a vice stock. There's people who go, I will not buy Diageo because I don't condone any, even an arm's length interaction with alcohol. That might in fact be the case for LVMH. There's a lot of considerations when you go into selling alcohol, and I have to say, I'm just under equipped on the whole view of the industry at the moment. I suspect what you're saying is a real threat, and that the luxury brands in the alcohol division will go into some kind of secular decline.
Yeah. Yeah.
But wait to hear this from, this is quite interesting, from LVMH's 2015 earnings call. It's a quote from Bernard Arnault, which I think is wonderful. He said, I think over the next 20 years, you'll have 80% of good years. We have 16 good years, and maybe there will be 4 bad years. And out of the 4 bad years, there will be 2 bad years and 2 very bad years. And I cannot tell you which these 4 bad years will be. Sorry, I'm translating from French to English. I don't know whether this will be this year, next year, or in 10 years' time. But one thing is almost for sure, there will be another crisis. He said that in 2015. That's quite, I thought, prophetic. Like he's basically saying that there's going to be, in the next 20 years, 80% of them will be good. And he said that in 2015, and he was right. So the stock is kind of down 20% year to date. Its intrinsic value has grown, has compounded by 14.2% annually since 2013. And Arnault's family holding, which is Financier Agache, I think Financier Agache still owns nearly half of the business, 47.6% of the business, and he continues buying shares. He is buying shares like a madman. So the I think there, like, he still sees value in the business. And Q3 revenue just gone reached 60.1 billion euro. And then kind of the Sephora brand. Mike, what does Sephora sell?
That's makeup.
Is it? Yeah, thanks. I didn't know. But Sephora brand has offset the weaknesses that you observed in areas like wines and spirits. And management expects organic growth near 9% and earnings per share to grow 12% annually. So, despite all these headwinds, whether it's people are drinking less, or there's less disposable income in the luxury sector, or French taxes, which I believe are on the up, free cash flow of around $14 billion and trading less than 20 times forward earnings, LVMH could really deliver a safe 11, 12, 13% returns annually for the next 5 to 10 years. I see it as one of those businesses that could sit there in the bedrock of your portfolio as one you enjoy owning, enjoy the fact that you can observe so many brands and that it has a 30 to 40 year pedigree, like unmatched. Like really, it is unmatched in strategic success. And I think whatever future problems it faces, it will outmaneuver them.
Yeah. Yeah. It's hard to look past it in terms of when you think of luxury stocks as a whole, it's top of the list
It's
wherever you
top of the
go.
list. Ferrari is obviously concentrated in what it does, and then you
Yeah.
like the Brunello Cucinelli is tiny compared to it. So there are other luxurious investments, Aston Martin and the London Stock Exchange, which is under so much debt. It's a story unto itself. So like there are definitely luxury brands you can buy into, but I cannot think of anything that even comes close when it comes to portfolio of pure luxury. No compromises. Like there's
Yeah.
no, well, Sephora might be a little bit more every day. I don't know. I just know I've seen a store and I've looked into it. But I like they really have an incredible to have 70 distinct brands. You wouldn't even know. I'm sure most of our listeners didn't even know that the brands that we've discussed here on this segment were fully owned by LVMH. So that almost speaks to the ability for it to actually acquire in perfect silence and let the business keep running.
Yeah. Yeah. And it's the conglomerate effect as well. You say, like, say the alcohol is underperforming, but then it's beauty products and Sephora is making up for that and more. And that's how these businesses work. And that's the joy of owning them, I suppose, as well.
I'll close with one thing because everyone loves me describing graphs. I'm looking at a graph here in front of me of EV divided by EBITDA, enterprise value divided by earnings before interest, tax, depreciation, and amortization. Wake up, everyone. It's a line. And when it's a positive number, when it's a negative number, new rules kick in. But when it's a constantly positive number, this trend line it's very useful to see if it's historically cheap. A stock is historically cheap against itself and its rivals. But the reason I mention it is that the EV divided by EBITDA line peaked around 2020, where the number, let's just give it a number, it was about 22. EV divided by EBITDA was about 22. It just then fell to where it is at the moment. EV divided by EBITDA is 12.9. So from a historical perspective, this stock actually looks quite cheap. And I think is one that I would like. You know me, I don't go for safe bets. That's not what I'm here to do. You live once, you go. I'm swinging for big wins, but I like LVMH and I like the idea of owning it. Would you buy it before I move on?
Um, yeah, I could see myself trifling a small bit.
Mm.
Seems like an opportunistic time. It's bouncing back from a bad run there for about 2 years.
Do you know, for our listeners, it might be an interesting gift for your loved one at Christmas, rather than buying them. If Christmas is a thing you do in your home, rather than buying them a very expensive piece of tat, why not buy them shares in LVMH and go, there
Yeah.
you go, I bought you luxury, and it's an asset that's going to grow in value. Although, in fairness, I suppose a Kaiser Sose a watch is going to grow in value, or whatever your man's name is.
I'd like to see that negotiation after
Oh
Christmas
yeah.
dinner.
Here's your share said happy Christmas. Right, Mike. Last week we introduced a new segment, Stock Club, called Following Profit, where you or I will spotlight one of Profit's current 10 stocks. And for absolute clarity, Horizon, which I pitched at the top of the show, is my 100 bagger hunting service, long-term buy and hold. And Profit is a rules-based, low-effort system for those who just have a just tell me what to do approach, and they want a service that is, I don't want to think, just tell me what to do. And it always holds 10 stocks. It rebalances monthly, well, every 4 weeks to be precise, every fourth Friday. And its track history is absolutely savage. An entry level broker on your phone can make all the trades in Profit. And as I said last week, I will, and I'll say every week, I'm going to caveat that we are talking about a company in the knowledge that Profit may sell it tomorrow. We don't know. So, as with everything we say here on Stock Club, caveat emptor. Right, Mike, over to you. Which of the 10 actively held profit stocks did you choose to take a look at this week?
I had quite an easy decision going through Profit. So Profit just added a stock I own. It's a former
Oh,
stock of the month. It was once part of the MyWallSt app, and it's a business I've admired for a very long time. So in terms of it was just added in October's rebalancing, October 10th. So going through the 10 stocks, it was an easy decision for me. Obviously, as you said, it could be sold again on November 7th when it rebalances. But the company I chose was Core and Main. So Core Main is one of the only two waterwork distributors in the US with a national footprint. So it's a distributor for water, wastewater, storm drainage, and fire protection products. Basically sells to governments, local governments, municipalities, private water companies, professional contractors, and then it is in the municipal project space, like non-residential commercial projects, and then residential projects as well. So it's part of a burgeoning. Wouldn't call it a duopoly, but a burgeoning duopoly. There's two companies in the US, two waterwork distributors in the US with a national footprint. Everything else is kind of localized competitors. So it's a very fragmented market. But Core and Main and then this other company, Ferguson Enterprise, they both control a little over 20% of the market. They're the only ones that go across the US. So it has this business model I love of kind of bringing national scale to local fragmented markets. We've seen it work out so well for some of the all-time great compounders like Watsco, O'Reilly Automotive, Copart. Just one look at their all-time stock charts shows why this works. And so a company like Core Main is going to have huge cost advantages over local merchants. Makes it incredibly difficult for them to compete. It makes it incredibly difficult for new entrants to come into the market. And then it's got and this is very particular for companies like O'Reilly Automotive, for Core and Main, where it's got a much deeper range of products as well. So when we talk about scale and we're talking about national scale compared to, say, your mom and pop shop, Core and Main has 370 locations across 49 states in the US, 5,000 suppliers, 60,000 customers. It has access to over 200,000 what it calls stock keeping units, which are just unique products, and many of which are actually exclusive or restricted. In terms of Core and Main, or Core and Main's distributors are one of, if not the only companies that can sell these products. So if you are a municipality and you want to do an entire project with one supplier, Core and Main is more than likely going to be the only place to go to. So you've got that kind of foundation for what I think is a really strong business. So it's estimated that its total addressable market is about 40 billion. 30 billion of that is the US waterworks market. We said Core and Main controls a little over 20% of that. It says of its total TAM. So if you add on, say, beyond waterworks, the fire protection products, stuff like that, it's got about 19% of its addressable market. So strong market position, kind of dominant in the right areas, with also a lot of room left to run, which is a very strong position. It's made about 40 acquisitions since 2017. And I like to see these kind of companies that have these scale advantages do that, because it's only kind of further widening the gap between it and its very small competitors. You're expanding geographic reach. It just is making more inroads into Canada, but also product reach as well. So it estimates that it can improve gross margins of the distributors it buys, the smaller distributors, by about 3% straight away. So just from its relationship with suppliers, its procurement practices, all of that, you immediately come in. Say there's two waterwork distributors in Galway, Emmet Savage Water and Mike O'Mahony Water. Core and Main comes in and buys Emmet Savage Water. It immediately unlevels the playing field, and Michael O'Mahony Water is goosed, unfortunately. And that's the way it goes. And that's why these enduring business models work so well. And it's why companies like Watsco, O'Reilly Automotive, Copart in a sense, and Core and Main can dominate smaller local markets.
Plus their water is wetter.
And that too, of course.
I had to just look up. Do you know how they got their name? This is just so boring and simple.
Go on.
It got its name from the core and the main lines in the municipal water infrastructure. So literally, it's a bit like, what's your man last week, John Plant? It's like what we call core lines and main line. Should we call it core and main there? That will do us. Honestly, could it be any more boring?
We're a long way from champagne and handbags with this stuff.
We sure are. We sure are. Even that I had to, like, neither you nor I could twig that Core and Main is a reference to the Core and Main lines in municipal water infrastructure shows how privileged a life we've had. Feel how soft those hands are.
Soft hands, I was about to say, yeah. So its customers are split up. 42% of its business comes from municipalities, so local governments, 38% from non-residential projects, 20% from residential products. And I'm bringing this up because, and this is actually probably why it got flagged by Profit as well. So Q2, the start of September, I think it was, results came out and absolutely wrecked the stock. I think it was down 28% in the space of a day. Management reduced full year guidance based on a weaker housing market, and obviously a weaker housing market in the US isn't going to be beneficial for Core and Main as 20% of its business. And I probably shouldn't say weaker housing market in a sense of, it's a lot more nuanced than that. Do you know what I mean? If you already own a house, you're absolutely laughing over there. I think home equity for US homeowners doubled from 2019 to today, from nearly doubled. So 19 trillion to 36 trillion. But if you don't own a house, you're kind of boned because mortgage rates have essentially doubled since COVID. So that the act of going and buying a new house has become very prohibitive. And now, because everyone has locked in low interest rates over COVID, no one wants to move because they would lose that as well. So this stymies new building projects a bit, hence why Core & Main is feeling the pain. And now, obviously, that is not a good thing, but it is by a long shot the company's smallest division. So it's stated in the Q2 report. And this ties into what LVMH was happening as well, is that the strength from its municipal demand and a stability in its non-residential demand helped to offset the softness in residential demand. So that's kind of where this conglomerate style business really helps, in that its diverse income streams mean that the effect of one aspect of it not performing isn't truly felt. Like, I think revenue is still up 7 or 8% a year despite that. And I think away from the residential stuff is where the business is going to flourish anyways. So I'm stealing. So the company went public in 2021. So this is all still pretty relevant, but this is an excerpt from the company's S1. And it said, I'm reading this verbatim: the average age of water and wastewater pipes in 2020 was 45 years, up 20 years from 1970. More than 600 municipalities still use 200-year-old cast iron pipe systems, and there are approximately 300,000 waterline breaks every year, representing the equivalent of a waterline break every 2 minutes. Significant investment is needed to close the growing water infrastructure gap. An additional estimated $2.2 trillion will be required for repairs and upgrades over the next 20 years.
Sounds like
This
an
is,
Irish waterworks plan. We're a couple of trillion short.
yeah, well, this is a $10 billion company. There's only two national operators here, and it's talking about $2.2 trillion needed for investment. I was doing the quick back of the napkin math. So that's, say, if you multiply its market, $30 billion is saying the waterworks system, by that 20 years, you get 600 billion. So the $2.2 billion invested is four times its current market in just government spending, which is 40% of the business. Does that make sense? So, like, as in,
Well, it
four times
does. You
40% of the business.
certainly, if you sit down with a spreadsheet, and I'm sure a team of MBAs came up with that, and engineers. So I don't doubt its accuracy. What I do doubt is its implementability. That
100%.
like you put a number like that out there, and it's shocking. Everyone's like, "Oh, we better do something about this." But the reality is, firstly, no human brain can grasp the absolute economic impact of that number. It just, you need it spelled out to you. The second is the disruption to actually do the work they're describing. They'd have to upend the whole of America. The whole of America would
100%.
be getting dug up.
And not only that, but like, given how polarized politics has become as well in the US in particular, like, huge investments in water pipes would be scrutinized to death depending on
Yeah,
who says it first. You know what I
yeah,
mean?
yeah,
But but underlying that is that this is mission critical elements to how a town or a city is run. You know what I mean? Sewage
yeah.
lines,
Oh, yeah,
drinking water, wastewater treatment, storm drains. If they fail, and they do fail regularly,
yeah.
it causes carnage. So there's no
Carnage,
deny.
absolute carnage. Facility number one every human needs is clean water in, still water out.
Yeah,
Whatever your system is, that's the first thing to humanity.
100%. So there's no denying the importance of a company like Core & Main. And I think because of the moat it's somehow built with the barriers to entry, the fact that it's very hard to replicate its scale from new competitors. There's only two between it and Ferguson there. I believe it has the ability to kind of experience sustained demand for that 20-year period without much coming in and affecting it. I think that's the main reason why I own it. And I think the fact that it's still 20% below all-time highs, it's sitting at just over 20 times earnings, makes it a very interesting entry point for right now. It's not going to be a face melter. It's got
No.
long-term forecasts of its long-term forecasts are 2 to 4% market growth, 2 to 4% organic growth, and then 2 to 4% from acquisition. So 6 to 12% revenue growth, is the kind of range it's targeting. It's not that sexy,
Uh,
but
am I right
it
in saying
has.
it doesn't pay a dividend? That's what I'm looking at here.
I imagine not. No, especially if it's investing so much in new
Yeah.
acquisitions and
Well, it's
opening up
funny
new stores.
because you're right. Usually, they'll because of the ownership of a business by pension funds, there's a pressure on them to pay a dividend no matter what they need the cash for, especially utilities. But it's quite interesting. Now, I wonder if Ferguson, their best friends, pay a dividend. Not that it is
Ferguson is a much
Ferguson
bigger
Enterprise.
company.
Yeah, it is. It's way bigger, and they do. They pay a dividend. Yeah, interesting.
Yeah, yeah. So that's core and main. And look, this is obviously all said with the fact that in 2 weeks' time,
Mm,
November 7th, that profit can go and sell it and bank whatever it's 6-7% gain that it's
mm,
locked in.
mm.
But I was glad to get the opportunity to speak on the stock that I own on the
Yeah,
podcast and the reasons for why I own it, because I think very much it has defensive capabilities there. I think it's hard to disrupt, and it'll be a mission critical part of governments, the country, the economy, whatever else you want to talk about. Like, this is the literal plumbing of that.
yeah.
It's a very, very, very important aspect, and it needs a lot of attention and detail that it probably isn't getting enough of.
Nice pitch. And I specifically like when I see a company in profit that I also like as part of my qualitative analysis process. So I've gone through every stock profit ever recommended, just a visual. There's too many to actually dive into, but every 4 weeks there's been 10 stocks measured for 17 years. And I've gone through all of the names on a giant spreadsheet. And I do like when I see one that I've personally bought. But what always intrigues me is it sells way before I would have sold or indeed have sold. So that's what makes, I think, it specific, especially interesting. The fact that you found one that you like, that was stuck in a month, that has great prospects for whether you hold it through the profit duration of holding or indeed for the long term. It sounds like a good one to put in the bedrock of your folio, perhaps alongside LVMH.
For sure. Couldn't have two stocks further apart from each other: sewage pipes and high end champagne and watches. But there you
So
go.
if you could only invest in one of the two companies, €1,000, which would you put it into?
It's an obvious one for me. I already own shares in Core and Main, but I'm interested to hear what you say.
I think I'd go LVMH. I think it's oversold, and I think it's just going to deliver a solid 12% every year for the next 10
Yeah.
years.
Wouldn't turn your nose up at that. Right.
No. All
I think
right.
that's all we're in it. Emmet, thank you very much for joining me. And thank you, everyone, for listening in. We'll talk to you next week.